Hello, and welcome to our end of November update from the Wealthy Doctor Institute. Physicians leading physicians through finance. We work with physicians and other busy professionals who are not happy with the current investment strategy. We help them get this part of their lives handled so they feel empowered and in control. I'm Dave Rier, and in my book, The Busy Doctor's Investment Guide, How One Adjustment Per Month Can Save and Maintain Your Portfolio's Health, I show you just a few ways where just a few adjustments each year can help build and protect wealth. All of the strategies in this book are easy to calculate each month. For those of you who are new to concepts of this book, or for those of you who are new to investing in general, this video will try to clarify what I do every month. Feel free to follow along every month until you get the hang of it. So this month, we'll talk a little bit about what the busy doctor's been up to this month. And as a result, while preparing for next month, we'll only briefly touch on topic of the month, review our systems, including our 20-month moving average system, reviewing the MRI system, reminding us the rules for the 25% stop loss system, and monitor our free token sector surfer strategy. So let's get going. So day in the life of a busy doctor. Now, even though I semi-retired 4 years ago, life continues to be busy. And last month was no exception. However, despite the busyness, I still easily place the trades indicated by my systems. They literally require mere minutes to see and execute. So what's been going on in the past month? Well, to start off with, I went to the AAII meeting, the American Association of Individual Investors, where I helped out my buddies over at Sector Surfer help spread the word about how useful this tool can be in terms of investing through shattering current paradigms about using modern portfolio theory, buy, hold, diversify, and pray. And then, after coming back, went to Tony Robbins' Unleash the Power Within. For those of you who have never been, this is a great intro program to Tony Robbins. I've been listening to his audio tapes since 1995. Around 4 years ago, I got tickets to his UPW, and I was wondering what the heck could I learn from a live event that I didn't already listen to for years on audio tape. But when I went to my first one, it blew my mind. And several of you know I'm a Tony fan. In fact, this time I went as a crew member. There are a lot of people like us who just love Tony's mission in life, trying to eliminate suffering on this face of the earth within our lifetimes, and eliminate through self-improvement, as well as other tools. And being on the volunteer crew is just another way of just giving back to both the organization and to community, trying to transform lives and help do something about overall suffering in this world in our lives. It was really hard work. If you've ever been to one of these seminars, just being a participant is taking a lot of hard work. But being a crew member, trying to make sure that everyone's taken care of, while at the same time making sure that we're not burned out ourselves, it was a pretty good exercise in managing our states. It was well worth it, and another good thing about this is that you get to meet a lot of other like-minded people. So shout out to some of you who are subscribing to this just because I met you through a Tony event. And then, after coming back, we had a brief respite for Thanksgiving week. Finally found some time to spend with my family and catch up with other work. So one thing we did was we went to our local Chris Kindle Market experience, which was, pretty interesting. I think each of our communities have something unique about it that brings a community together, and always a good idea to try something new. But then right after that, right after Thanksgiving, every year after Thanksgiving, some of you know, I go to the RSNA, the Radiologic Society of North America. This is one of the biggest medical societies in the world, where despite saying North America, we actually have a lot of people from overseas coming over to Chicago every year, taking up pretty much all of McCormick Place. In fact, supposedly there are only 2 or 3 convention centers throughout the entire continental USA that can actually be big enough to hold the RSNA. Supposedly this is the second largest convention that they hold at McCormick Place. The first one is the plastics industry. And just walking in the technical exhibits, you see a lot of the big name brands of radiology, as well as a lot of up-and-coming technologies that just seems to be popping up every year. In terms of education and networking, It's amazing and exhausting. For instance, I just found out that with our new iPhones, we have a heart app which automatically calculates our steps we take every day. And my steps zoomed up to 15,000 steps per day at the RSNA. And then to top it all off, right after the RSNA, I went to Matt Fury's coaching seminar. Now, some of you might have heard of Matt Fury. You may have seen him advertising in some of these martial arts or muscle magazines touting his combat conditioning. Or maybe some of you in the self-development world have heard of Matt Fury taking over Dr. Maxwell Maltz's Psychocybernetics, another incredible program that's stood this test of time. But few people know that Matt actually also offers coaching programs, anywhere from internet marketing to health and fitness, fat loss, energy, and business development. So yes, November has been really busy, and thank goodness that we finally found the chief of nuclear radiology over at UIC to take over, otherwise I would never have been able to do what I did. And life continues to be amazing. But you notice, despite all that time on the floors, walking around, doing stuff, the investment strategies I outline in my videos and in my book are still really doable, despite being this busy. So I know I've met several of you for the first time. Welcome to the video. And in meeting so many new people this month, I haven't really heard any burning questions from anyone yet. So for this month, I'll keep it short and sweet and skip over the question of the month. So, to review our systems, remember, we have systems because we let our systems objectively look at the footprints of every trader and investor in the markets and let the markets tell us what to do. If you notice, one common denominator of all our systems is that we never look at secondary data such as news reports, politics, war, Ebola, or what the talking heads say over all the media. So our first system is the 20-month simple moving average system, abbreviated to the 20-month SMA system. The rules for the SMA are very simple. If the price of the S&P 500 index fund is above the 20-month moving average, it's relatively safe to stay invested in the index fund, otherwise get out. So remember, every dot on the 20-month moving average chart represents the average price, dividend corrected, of the index fund for the last 20 months. Remember, the 20-month moving average is our safety belt. It only works if we watch it every month. Not more often, not less often, once a month. So here's a graphical representation of what it looks like. So if the blue line is the S&P 500 index or the S&P 500 index mutual fund that's dividend corrected, and the red line is our 20-month moving average, this dot from the latest line represents our 20-month moving average, the average price of the last 20 months. So if the VFI index, which is the Vanguard S&P 500 index fund, ended the month at 245.24, our moving average is now 212.99. And in fact, the market's moved up so quickly that our safety cushion has gone up to 15.1%. So the good news is we have a lot more wiggle room. If the markets were to drop less than 15%, we'll still be in the safe zone for next month. However, if the markets drop more than 15%, then we'll be in the danger zone and we would need to get out. But again, we'll cross that bridge when we get it. Don't try anticipating the system, just watch once a month. Now, one question I get is that, well, oh my God, 10% or 15%, that's a huge amount. Well, that's true, but remember, a small loss here protects a even larger loss coming up later. Remember, we're not trying to save ourselves from all losses, just the bigger ones. So the 20-month moving average observations for the month, the indicator continues to signal relatively safety in the U.S. stock market. Both the S&P 500 index and its 20-month moving average has increased to a point where the safety cushion has increased to 15%. And for those of you who would rather use Sector Surfer's Stormguard armor system instead, we're still in the stocks, not the bonds. So our Stormguard armor indicator is still solidly in the safe zone, which is positive above the zero line. So our next system, is the monthly rotation investment system, abbreviated to MRI system. Now for this system, again, it's a very simple system. All you do is rank, using dividend-corrected data, only 3 mutual funds: the S&P 500 Index Fund, here the VFINX, the Emerging Markets Index Fund, here the VEIEX. I use the Vanguard fund since they're the lowest cost and has the most data, and RYURX, which is the inverse S&P 500 Index Fund, which of course Vanguard doesn't have inverse funds, so we use RYDEX. Every month, rank the 3 funds, sell the bottom 25% of your portfolio, and buy the top fund. So this is what MRI looks like this month. So last month's data, this month's data, divide, and we find that the clear winner this month is the S&P 500 Index Mutual Fund, having gained 3.06% this month compared to an almost flat emerging markets. Now remember, most of this year so far, the emerging markets has been dominating. And in fact, this month, if you take a look at the first half of the month, markets have been relatively flat, but then all of a sudden, markets start to climb. The emerging markets more so than their stock market. But then, strange thing happened. Around the week of Thanksgiving, the US markets kind of petered out and then started going up again, whereas the international markets started to go down. And it wasn't until the last couple of days where the leader actually changed from the emerging markets to now the S&P 500 index. So according to our model, we are now going to rotate 25% of our portfolio into the S&P 500 index fund. So here's what it looks like. Last month, we were 100% in the emerging markets fund. This month, we're supposed to sell the bottom 25% of our portfolio, which is the emerging markets, and use that to buy the S&P 500 index fund. So now our portfolio looks something like this: 75% emerging markets, 25% S&P 500 index fund. So this is Sector Surfer's version of the MRI. If we use the same 3 funds and we were to rotate them using the Sector Surfer algorithm, we're still 100% in the emerging markets. Remember, the Sector Surfer strategy uses a different algorithm than our MRI algorithm. So whichever algorithm you're using, stick with it. Don't cross-pollinate. Each system has its strengths and weaknesses, but only if used in its entirety, not picking apart one part and another. Because when you start to combine different strategies together and you don't backtest to see how it works in the past, you're never going to know what you're going to get in the future. So whichever strategy you choose to use, stick with that strategy. So the observations for the month. While the markets were fairly flat during the first half of October, the emerging markets initially outpaced the US markets during the second half, but then started to wane. Sector Surfer continues to be in the emerging markets. Remember, Sector Surfer uses a different algorithm. Don't mix up the systems. Just because 2 different systems may seem to agree doesn't mean it's a sure thing. So just because right now there's a discrepancy doesn't mean that one is necessarily wrong or right. They both work in different contexts. But once you start modifying rules on the fly, you no longer have a system. So the next system is a 25% trailing stop loss system. The way this works is if you really want to buy an individual stock rather than a mutual fund or an ETF, limit your risk of that one stock to just 1% of your portfolio or a trading account. And this is how you do it. If you have a 25% trailing stop loss order, you can use up to 4% of your trading account to buy that one stock. This way, if the stock drops 25%, the most you lose is 1%. Makes sense? And then if the stock goes up 33%, then your stop loss is essentially the same as your initial buy price. You have very little risk at this time, and you can buy another block of your stock using 4% of your account and then up to your trailing stop loss order appropriately, and just keep repeating that until you're stopped out. So our next system is your own Sector Surfer system. Now, I can't tell you how your own Sector Surfer system is doing because every system is different, depending on which funds you choose and which levers you choose to click on to make your system work. In general, Sector Server is an improvement on classical pie chart investing if structured correctly. Sector Server has two main tools. It has Stormguard Armor, which is kind of like my 20-month SMA system, only more robust, trying to figure out whether or not it's relatively safe or dangerous to be in the stock market. And then it has a sector rotation component, which is like my MRI, only more robust, and trades less often, and can handle up to 12 funds. Now, the reason why I can combine both the Stormguard Armor and the sector rotation is that when Stormguard tells you it's relatively safe to be in stock market, it rotates only through your selection of stock funds. Whereas if Stormguard Armor tells you it's relatively dangerous to be in the stock market, you'll only rotate through non-stock funds such as bonds or index funds or cash. Now remember, once you set up your system, it's a good idea to at least look back and see how this system might have performed in the past. Remember, past performance doesn't guarantee future results, but if it's never even worked in the past, there's no real reason to think it's going to work in the future either. And remember, there are nuances when constructing or executing strategies. That's why I make this video. So if sector strategy is set up properly, you will get a signal through text or email. Once you get that signal, you just log on and see what trade you're supposed to make. Make that trade. Sector Server does not make the trade for you. All it does is give you a signal. Then you log back onto Sector Server and click Acknowledge to let Sector Server know that you've done it. Then Sector Server will leave you alone until the next signal comes up. Now, for me, because I manage many different accounts, I log in periodically, roughly once a week, just to make sure I don't have any trade signals that are pending. And Sector Server does give you a free strategy. In other words, you don't have to pay for Sector Server, although, $10 a month, it's not that bad. But the free month's strategy this month remains A, in the safe for stocks zone, under Stormguard Armor, and B, we're still in the Fidelity Small Cap Stock Fund as this fund of choice. Yes, if you saw this slide change, I made a typo. So our free Sector Server strategy is this one here. It has these particular Fidelity funds. As you can see, we can potentially improve on this. One thing that's very obvious from the get-go is we can separate out the stock from the bonds and use just the stocks for the save for stock phase of the investments, and then put the bonds in the bond fund strategy for when it's dangerous to be in stocks. And instead of using Stormguard Acute Quick Response, we can use Stormguard Armor. But if you're happy with this strategy, it's free. So in summary, remember, we went over different systems. Don't mix up the systems. Keep each system separate. If you switch between systems or do not take action, you have no system. We went over the 20-month moving average system, the monthly rotation investment system, the Sector Server versions of these two systems, dealing with stock tips, and then monitoring your own free Sector Server strategy on this video, as well as reminding you to monitor your own Sector Server strategies at home. Keep those questions coming. I know I talk to several of you personally each month and realize that for some of you, these video updates are not enough. Especially if you're still unhappy with your current investment strategy or lack of strategy, I'm going to offer a complimentary investment wellness checkup and breakthrough session for just you and me. Ask all the questions you want, no matter how seemingly basic or clueless you think you are. In our checkup and breakthrough session, we'll together create a sense of clarity about the financial future you really want, the reasons why you're investing to begin with, and how to get you there, discuss the investment building blocks that are more specific to your situation, determine what has stopped you in the past from getting what you want now, and identify what are the more important steps you will need to take now to get to your investment and financial goals. And then complete a consultation with the excitement of knowing exactly what to do next to create that road to the future you really want. Think CME, only the topic is financial and tailored to you. Think wellness checkup, because whether or not you feel financially fit, or if you have a financial cancer or blind spot you don't know about, wouldn't you rather at least know so you can deal with it before the problem grows bigger and metastasizes? Don't be bashful reaching out. The more you delay, the more time is against you. So, until next month, invest safely,